Should we sell in May? It's always a good question, and there's a lot of truth behind it. It's a long-standing fact that the summer months tend to be a little bit choppy, certainly going into October, November. And what the sell in May signifies is that there's a best 6 months and a worst 6 months of the market, and most returns of the market happen between Halloween, really the end of October, and then the 1st of May, and then from May 1 to October. It doesn't mean it won't go up or down, but there tends to be a lot more chop and sideways motion, a lot more interesting things going on, I should say, choppy, and it's a little bit harder to predict. But in different market environments, like I've shown before, there tends to be times where it's good and times where it's bad. So traditionally, sell in May would be the 1st of May, and that's really through October 31st. So really, the expectation in most years is that the market will be lower than it is now in October than it is starting in May. But doesn't mean there can't be a great upside. Usually July is pretty good. And then you get the big August, September downturn. So for the longer term, buy and hold thinking, it's better to buy here and then sell somewhere around there and then skip this altogether because it's messy. It very historically is. So you want to be careful of that. Just be aware that the summer months tend to be choppy and a little bit messy. However, and I've shown this before, during election years, specifically going back, this was to 1928. May is still a little bit iffy, but then you get a great run, and it's probably going to be higher in October than it is at the beginning of May. There's still, questionable periods of time, but generally the market's going to probably go up, or at least has a tendency to when it's an election year. And then after that, you don't know because it's gets messy here, and then it's really questionable in November, and then after that, we'll have to see where it breaks out. But we do expect this year to be positive. May could be a little bit ugly for the second half. That's certainly possible and within the realm of what we're looking at. But once we get through there, we could see a very good July, August, a good summer. That's not always as normal as the case, and we could be higher in October than we are now. So that's a positive thing that we're thinking about in the market. I have one more slide for sell in May, but I will show that at the end. Quickly dive through our monthly charts. So the long-term trend is actually pretty good. We had a questionable April. It seemed pretty textbook. It was a textbook 5% correction, which happens typically 2-3 times a year. It's not uncommon. Yeah, it just went almost exactly 5% and then recovered. So nothing really out of the ordinary there. The money's recovering. The last few days have been a little iffy, not real strong, but not bad. We're not in a place where we need to be just out of the market at this point. We're mostly in or 60-80% in at this point. So not super defensive. But not 100% in. There are a couple of other factors that are iffy right now. And then our midterm cycle, this shows the sell-off in April. It was way below here, the 200 and the 200 positive, 200 negative line. I've now added this to our chart. We had our programmer add it so we can get a better visualization of what happens in the range as far as money flow. Is it really strong like it was back in November, December? And then we had the weakness in January, although the market didn't correct too much. And then the run up in February, March really did not show a lot of money flow, showing it positive. It just kind of chopped along sideways, but it was positive enough, and you don't fight that. But then our April sell-off, just very textbook, was like, there we go. There's the money coming out of the market, and now it's coming back in pretty aggressively. We're definitely above that 200. We're close to 600. That's a good sign for now. Money flow's there. No, people aren't scared. People aren't pulling the money out, and that's what I'm looking for. When people are pulling the money out of the market, that's when the market tends to go down. And this is a really good indicator or early warning sign that something is going wrong. As for last month versus this month on some of the major ratio charts, and these are all based on 1 month, right? So, and on a daily chart. So is the NASDAQ stronger than the S&P, small versus large, NASDAQ versus small, just to kind of get a sense of where things are in the market. And these, every single month this year, I think have been slightly different. We're back to NASDAQ over S&P, small over large, small over NASDAQ. And the few other times that that's happened hasn't lasted long. So for some reason, small cap is strong right now. I don't know if that's going to stay. It's hard to say. But also encouraging is these two leveraged. So we look at the ratio of a leveraged fund versus just the standard index fund. And if the leveraged one is stronger, that just suggests that there's enough momentum behind the market to continue up. And growth is over value. Although I think most of this month between our last webinar and this one, value was in charge for a lot of it. And this flipped back, I think maybe a few days ago, maybe even a week. There's just a lot of changing. There's not enough leadership that's staying consistent to make us say, okay, here's a good trend. We can stay on it, ride it to the end. It's just kind of oh, this is good. Wait, no, this is good. And it's hard to stay on top of that at the moment. So we'll see how this plays out. Like I showed with seasonality, I think May could be choppy, iffy, and that seasonally starts the second half starting next week. So we'll keep that in mind. But at the moment, things are all are good enough. They're good enough. I'm not too afraid. The sectors back that up. We've got a 7-4 positive to negative. Energy was the standout of the strength when things were iffy, and now it's the weakness, far below everything else. It's below its 8-day, and everything else is above it, and that's just strong. Negative MACD on the energy. It's pretty broad. There's not a standout saying it's just the defensives versus the aggressive sectors, but really not a whole lot to be concerned of there. Other than I'd love to see more of these on the positive side. I'd love to see 10, 11 sectors positive, not 7. That's a little bit shows a little bit more strength. And then showing that in the rotation graphs. Here's energy kind of in its own little world down here in the lagging box. You don't want to be in stuff that's in the lagging box. But watching all of these push up and through to improving, our midterm back setup, our sectors, we saw that more sector strength coming in. Utilities is way out here. They're doing all right. That shouldn't be. That's usually defensive. So that's an odd thing because our defensives led us, if I recall. Last month we were looking at utilities, consumer discretionary or consumer staples. A lot of the defensives were the first ones to really do that. So it's not surprising to see them lead the way, possibly into the weakening. But right now we're leading. There's really not a whole lot to be concerned about here. Really, everything above this midline is pretty positive. So it's hard to bet against this market right now. When they start pulling back, then you start looking. Okay, is it time to exit? And then into lagging is where you got a problem and you want to pull on. And then for my last slide, going back to seasonality, this is based on Jeff Hirsch's work. He does the Stock Traders Almanac. They've got tons and tons of data on this and as to why selling in May. And they also have created a MACD overlay to say, okay, if that whenever that turns in April, that's usually a good sign to be gone for the summer. But that's on a longer time frame, and that actually triggered on the first day of April. Usually it's much more later in the month, but it just went straight away. So right there, we've got the sell in May signal on their time frame to say play it safe for the summer until October. Actually, frequently I hear people say, "Oh, sell in May," and they think it's like for 1 month or 2 months. It's really a 6-month period. So this is an expectation of not a lot to happen from now until October. But as you've seen with what we do, we can get defensive and aggressive many times over in that time period. So I'm not too concerned about it. I think there's going to be some good opportunities this summer, and that's what I am looking forward to.